I want to thank everyone for taking time out of your day to join us. And this is going to be our webinar, Sales and Use Tax Compliance for Fishbowl Users. My name is Matt Hammond. I'm a sales manager here at Avalara. I've been here for roughly 4 years now. Managed the QuickBooks marketplace for quite a few years. And when I'm not selling tax software and talking to the small to medium-sized businesses, I'm usually playing golf. I spend a lot of time on the weekends on the golf course. My goal is usually to get 18 holes in before my wife wakes up. She likes to sleep until about 11, so I have quite some time during the morning on the weekends to get that done. And we have 3 coon hounds that we take on a lot of long walks on the weekend. So playing golf and walking the coon hounds is really what I spend a lot of my time doing. And this should be a good webinar here today. Myself, Matt, is going to be doing most of the talking and walking through the excuse me, the PowerPoints. It won't be a death by PowerPoint. I promise we'll show some stuff. We'll do some Q&A, have some polls, and then at the end we'll walk through, show a little live demonstration within Fishbowl. So we have Gene as well, who's our QuickBooks and Fishbowl guru. Gene's one of our Intuit top 100 QuickBooks Pro advisors and Fishbowl inventory superhero. So I love that line and that stuff. She's great at what she does. She enjoys helping the business owners and has worked with them, encompassing everything around their business. Great information, from the perspective of the CPA, and she was a former auditor with Ernst & Young and a longtime CFO of a medical device manufacturer, and is great in the Fishbowl community and a great partner with Avalara. So we're happy to have her on the webinar as well today. So you have 2 folks here that are going to be doing some speaking with you, and we'll run through the PowerPoint, and then we'll also ask you, the audience, some questions, and then we'll show a couple things about what it means for sales tax and Avalara and Fishbowl and kind of everything encompassing. So again, my name's Matt. I'll be doing most of the talking today, and if somebody could just type in the Q&A box and let you know that you can hear me okay, I'm sure we're probably good, but if somebody could just type in there saying we can see the screen and we can hear me okay. Okay, perfect. Thank you, Cheryl. All right, great. So we're gonna cover a lot of things today. So really, sales tax it's so challenging. It's a non-revenue generating activity, and it's something that truly can't be mastered. We like to say that even the professionals need to be updated and hear about the new changes and laws and rules and everything, on a monthly, quarterly, annually basis. So today we'll talk about sales tax management. Even the experts know it's difficult, challenging, and very hard to manage. We'll also recognize, emerging policy issues, key rules, trends that make it very, very hard to keep up with the rates, rules, and boundaries and actually calculate properly the amount of sales tax. The third item, which is one of my favorites, if you know nothing about Nexus or have never heard that word, I can promise you will leave this webinar today with at least knowing that. So that's good. We'll talk about Nexus. What does it mean? What are the challenges and why it's important? Finally, we'll address some ongoing areas of concern, the legislation, how it can impact your business today, tomorrow, 6 years from now, etc. So we'll cover a lot of this today. We're going to run through about 15 to 20 PowerPoint slides. Then I'm going to show you a little brief snippet for Fishbowl, and then we'll also talk a little bit about kind of how you set it up and what that looks like on the Avalara side, on the Fishbowl side, and kind of the whole, and then we'll open it up to the Q&A. If you have any questions that pop up, just for the audience, if you have anything that you think you want to ask it while we're 2 minutes in or 5 minutes in or 10 minutes in, just type them in. I'll circle back around at the end, and we'll make sure to answer all those questions, and then we'll have an open Q&A for questions that want to be typed up at the end as well. So 69% of accounting and finance professionals agree on understanding that sales and use tax is one of the most confusing parts of their job. So if you just think about that for a minute, that tells me, number one, it's not easy. Number two, it's always changing. Number three, it's just there's so much that goes into sales tax. And, this is us understanding and trying to grasp the rules of the states and local taxing jurisdictions to make sure it's done right. So it's very challenging. And if you thought it was easy before today, I doubt anybody did, but we will we will reiterate to you why it is so hard. So, and segue to my next slide. So why is sales tax management so hard? There's a lot of things that come into play. You have content changes. So you have transactional calculations. So if you have a website or a shopping cart, you need to calculate tax there. You have government filings when you have to actually send the returns in and handle the remittance. You have to keep records of everything you've done. You always have to make sure the rates and jurisdictional changes that are happening are up to date in your current accounting software, your accounting package, or your shopping cart that people use to buy on your website. You also have business processes. So let's say you have multiple systems. You have QuickBooks, Fishbowl, and a WooCommerce shopping cart. Those are three areas where you'd need to make sure you have the right tax, specifically if a real-time calculation is requirement. You also have to work on the deadlines and the filings, keeping track of payments and receipts, and then also, collecting the tax. Because at the end of the day, sales tax is not your money. Whether you're an owner of a company, a CFO, an accountant, a controller, whatever, the tax is not your money. That's the state's, that's their revenue. So it's your job to make sure you calculate the right amount, and then also at the end of the month, give it back for the following month, give it back to the state. So sales tax is very challenging, and then you need real-time requirements. So you always have to have an immediate determination. You always want to make sure when they are purchasing your product that you're charging the right amount of tax, and then also making sure every day of the year and week and month, and if you have a website and you're open on Sundays and Sundays as well, that you need to be calculating the right amount of sales tax so that you are charging the proper amount so you can then remit it as well. So these are just some key points of why it is so hard. So what I like to ask folks is the following. So have you ever asked yourself these questions? Following tax laws and rates is so hard. How do I know I'm charging the correct rates and filing my returns on time? Essentially, how can I ensure that I can be more compliant, or that I am compliant today? Where do I have an obligation to collect and remit tax? I haven't even been to Georgia. How could I have nexus there? That's a good one. What are the upcoming legislative battles that could affect my sales tax compliance? If I got audited, would I be ready? Most people think they are and feel good about it. And some people may never go through a sales tax audit. Those are the lucky ones, and I hope you're in that group. And then 5, can't this be any easier? So these are some questions that I'm sure people think about on a day-to-day basis, or specifically when you get to the point where you are potentially getting registered in a new state, or just filing your tax returns at the end of every month. So how can I be sure that I'm compliant? So this chart, there's going to be a couple things that are going to pop up here. Everything starts with a rate, right? Now, what goes into a rate? You have everything that is involved in a tax calculation. A tax rate is what it is. Number one, do you have nexus? Meaning, do you have an obligation to collect and remit tax in that state? That's the first part. So do you even need to charge or figure out what percentage or what dollar amount of sales tax should be charged? Number two, is the product or service you're selling in fact taxable? There are some services and products out there that are taxable at the state level, but exempt at the city level. And we'll get into that here in a little bit. Software as a service is a great example. And then the jurisdiction assignment, right? You have to know whether you have a city, a county, or any special taxes, local taxes that are applicable at the ship to address when you actually complete a sale. Number 4, exemption certificates. Is the company you're selling to even taxable? You got to think about that, right? If they're not taxable, they should be giving you a sheet of paper that says, here's the reason not to charge me tax. And if that's the case, it's your responsibility as a business owner or a controller or an accountant to make sure that exemption certificate is on file. It's up to date, it's accurate, and if you, heaven forbid, again, you'll hear me say that a few times today, heaven forbid you go through a sales tax audit. I worked with a guy last year who had 700 exemption certificates on file. He went through a sales tax audit, and one of them he could not reproduce, could not get it. It was not accurate. It was not the right one. And I think it cost him, about $15,000 roughly in a sales tax audit, just due to the amount of tax for that particular customer that they were charging. So exemption certificates are key. If you sell to someone that tells you they're reselling their product or you don't charge them tax, if you've never gotten a certificate from them, I would strongly consider you to ask them to get an updated certificate. And, you know, I'm Matt here. I'm not a CPA or a tax attorney. I can't give you advice or tell you what to do, but these are just some very common pitfalls that we see. So exemption certificates are a key point. And then number 5, you have state and local tax preparations and filing. So your state returns have to be due at the same time. If you're in Colorado, Alabama, Louisiana, any of those home rule states, as we like to call them, you may have local tax returns in addition to the state tax return that needs to be filed. And then number 6, audit readiness. You know, the very far right tip of the iceberg, right? If somebody walked in tomorrow and said, I want to see all the exemption certificates for your customers you don't charge tax, I want to see all of the returns you filed in the last 6 months, I want to know why these products you're selling are not taxable, you know, would you be ready? Would you be able to put something together quickly enough to hopefully pass it? So those are just some of the key points when it comes to tax calculations, what's involved, and then obviously being ready for an audit. So the product taxability challenge. Product definitions vary by jurisdiction. Complex product-based exemptions and special rates, and then taxability can also vary on you know, how the product is being sold, used, purchased, etc. So, for example, tree trimming, and these are a bunch of them, and I'm not going to read all of them. One of the ones I always like to talk about is bagels. So, if you're in New York and you order a bagel and they slice it, that is considered a service. So, it's a service to slice a bagel. It then becomes taxable. If you order a bagel and they don't touch it and they just hand it to you, that's considered exempt because there's not a service involved. Candy bars in Indiana, Nestle Crunch is taxable and Kit Kats are exempt. It has to do with the flour content, whether or not it's considered a food or a candy. Snow removal in the Midwest, which I'm sure there's some folks on the phone that have been fully engulfed in that in the last couple months as there's been a lot of snowstorms. So snow removal is taxable in Ohio, but exempt in Illinois. And you can look at some of these other ones. So donuts in Texas, right? Less than five is taxable, more than 5 is exempt. So these are just all of the funky rules that come into play when it's surrounding sales tax and the product taxability for what you're selling. So if you've just been doing sales tax manually for years and you've just kind of been winging it, it may be time to talk to, you know, somebody like Gene or myself, Matt, here at Avalara, just about what you're doing and how we can help and what might make the most sense. This isn't a webinar on, you know, by Avalara. This is a webinar to discuss the complexities of sales tax, how we help out within Fishbowl, and you know, really why you should think about talking to a third party for sales tax automation and compliance. So just some examples for how difficult it is as far as the product taxability. So I haven't been to Georgia. How could I have Nexus there? So these are some of my favorite things I like to list when it comes to a webinar, because a lot of folks don't have the knowledge or know that there's a lot of reasons where you may need to get registered to collect and remit sales tax outside of your home state. So for everybody that's on the webinar today, I'd like you to think of, when you're looking at this slide, think about the state that you're located in. Let's say you're in North Carolina. I'm going to pick that one because that's where I am. So if I had anything that's listed on this screen here, so inventory in multiple states, affiliates, if I'm drop shipping from California, if I have multiple locations as far as my states, if I have board members in 5 states, if I go to trade shows in Texas or Indiana, if I do marketing advertising up in Vermont, these are all reasons where you may have to get registered to collect and remit tax. Now, the term nexus is an industry term that states you have established some sort of physical presence to a taxing authority outside of your home state. So think about boots on the ground, inventory, contract employers, drop shipments. Every state is different. However, these are the reasons where you may need to get registered to collect and remit sales tax outside of your home state. So as you add employees or as you're going through, you know, your books and your returns, you know, at the end of, you know, we're at the end of March right now. So there's going to be a lot of people filing a quarterly return in April. Think about where you have all of these items. You know, do you need to get registered in some other states? Avalara can help you get registered. It's about $100 per state. If you have a CPA or a tax attorney that can help you do that, great. I tell most folks, if you want to do it yourself and just get registered, go on the Department of Revenue website, fill the forms out. Typically takes a few weeks. You can actually go on the DOR, Department of Revenue website, for the individual states, and you can see some states may not consider drop shipping a nexus building activity. Most of them do. Some states may not think that a 1099 employee is in fact a nexus creating activity. So do a little research on your end. Football's over, so you can kind of take some time to look at it on a Sunday if you get really bored. But these are the main reasons why people have a requirement to get registered to collect or remit tax. And again, nexus is a term that we use in our industry that means you have a requirement to collect tax in a different state because you have a tie with that taxing authority. And if you have any more questions about nexus, please put them in the Q&A box, and we'll address them at the end. So there are roughly 16,000 taxing jurisdictions in the U.S. So this is what's really tough about. There's 150 million mailing addresses. There's 11,000 jurisdictional rules, 35,000, different rates. There are 30 million product service exemptions, and then 750,000 buyer-seller exemptions. So this is why it's so challenging. Keeping up to date with the rates and rules and boundaries, I don't know why anyone would ever want to try and do that by hand. The biggest challenge today is just understanding that they are out there, they are hard, it is difficult, and that, you know, finding potentially a third-party provider like Avalara that can plug into your accounting package to make those, you know, significantly more seamless and a lot easier. So what are the upcoming legislative battles that could affect my sales tax compliance? I'm going to go through this one, then we're going to launch a poll for the audience. We'll take a little breather, and then we'll finish up the slides and then walk through a little demo. So just want to make sure we're on the same page, everybody's awake. So what are the upcoming legislative battles that could affect my sales tax compliance? So this is a big one. I mean, online sales. Right now, if I have a website and everything related to my business, I sell shoes, I live in North Carolina, and I don't go to any other states, and I ship all my products with common carrier, I would only charge sales tax to the people in North Carolina because that's the only state I have a actual requirement to. So states are losing money, and they're really having some challenges with you know, the dollar amounts from uncollected tax from e-commerce sellers. They're losing $24 billion just from uncollected tax. A lot of this has to do with Amazon and the private websites and et cetera. But these are reasons where stuff is going to change. Rules are going to change. Laws are going to change in the upcoming years that are going to make it, you know, even more challenging to keep up with, you know, what you have to do as far as the tax calculation, the filing, and the remittance as well. So there's a big court case that's coming up here soon, and they call it Quill. So Wayfair versus North Dakota could change tax compliance for online sellers like the internet changed retail. Everybody knows what's going on with retail. It's kind of a dying breed. So basically, if it's overturned, remote sellers will be required to register, collect, or remit tax in a lot more states than just the ones they are located in. The cost of compliance and online selling would skyrocket. We'd enter a whole new era for retail taxation, and that's a big thing for providers like Avalara and some of the other folks out there, where, you know, you potentially may not have to have nexus in a state to then collect tax and charge tax on your online sales. So if it's not overturned, the online sellers will go on without having to collect or remit sales tax they sell to. States will continue to lose revenue, and states will keep fighting. So this is just one of many that I think are soon to come, and all it takes is one ruling in one of these court cases that can pave the way for all these other states to make their own new rules and reference this one, and potentially change the game, in my opinion, as far as sales tax is concerned. So we'll talk briefly. This will be this last slide here about Amazon, and then I'm going to launch the poll. So let's say you obviously have Fishbowl as your inventory platform, and you're doing some quotes out of there, but you also sell on Amazon. So Amazon is this huge wave and this huge net that's sweeping everything up, and it's a great company. But if you are selling on Amazon, you potentially have to get registered in between 26 and 30 states. So those are all states that you can see here that actually have warehouses in them. And in Amazon's fine print, it will discuss that third-party inventory is a nexus building activity and is the obligation of the seller to file and remit. Amazon's already going to charge a tax. It's up to the seller to actually remit. So if you are in the FBA program and you're only registered in Georgia, you potentially need to get registered in all these states. And then once you do that, you would then have to charge tax whenever you send an invoice or have a quote or an estimate or a sales order in Fishbowl. You'd have to charge tax in a lot of other states. So Amazon is truly paving the way for sales tax and making sure people get registered and also opening the door to a lot of these other ones. So I'll take a breather here. I'm going to go ahead and launch the poll. There were 4 questions. I'll read them out loud as I launch it. I think they're going to come across on the screen as well. So are you the person at your company responsible for managing sales tax? Yes or no? How many states do you currently collect sales and use tax in? And pretend like we haven't been talking for 15 minutes. So if you feel like you need to be collecting in more, don't be afraid to put that in there. Would automating sales and use tax make sense for your company? And then how do you currently manage sales tax compliance? So you have an internal software manually. Do you send everything over to your CPA once a month, once a quarter, and they just handle it? I know a lot of CPAs that partner with Avalara and work with us, and you know, the way I like to phrase it is I don't know, I've never spoken with a CPA who says they enjoy filing sales tax returns. I know a lot of them will do it. It's not their bread and butter, but it is something that, you know, that a lot of times business owners and controllers will outsource. But we partner with CPAs, they're our number 1 referral, so they're great at what they do, and they can definitely help you. Depending on your tax scenario, your risk profile, if you will, it may make sense to work with a company like Avalara, or if you're in one state like what is it? Massachusetts has a flat rate state, and if you're selling something that's fully taxable like a calculator and the flat rate is 6.75%, you probably don't need a CPA or a software like Avalara to tell you how to do everything. So it really depends on your profile and what state. So right now it looks like most folks on the call are in charge of managing the sales tax. Most folks are doing less than 5 states. Would it make sense to automate for your company? Yes. And then about half of them are doing the manual. Some have the CPA and some have the internal software. So thanks for taking the time to answer those questions. I believe that's all of them. So we'll go ahead and end the poll. This just helps. It gives me a little better idea of kind of who we're speaking to on the phone call today and during the webinar. So thank you everyone for putting that in. And so if you have any questions about Amazon or FBA, please fire those at the end, not a problem. And we'll move on to our next topic. So if I got audited, you know, would you be ready? It's a good question. It's a hard question to answer. Specifically, if you're the person who is managing sales tax for your company and you're in charge of it, you know, it's worth a conversation with a CFO or a controller to say, hey, we may be able to do a little better. So I always ask folks, you know, if you got audited today, would you feel confident? Would you be good? Do you think you'd lose your job if it was done really wrong? But, you know, would you be ready? So 75% of accounting professionals truly admit that they would likely find some errors. I think that number is probably a little higher. It could be, I think, probably some people that felt like they wouldn't uncover errors, probably didn't want to answer it, but that just gives you an idea of, you know, accounting professionals, you know, completely understanding how hard it is and how challenging and how error prone, you know, it can truly be when it comes to sales tax. So the audit readiness challenge, right? So access transaction and tax detail, you know, when that is required or asked from you. Provide proof as far as a valid exemption certificates, and hopefully the nexus thing kind of made sense for how I explained it today. Exemption certificates, that's a huge, huge part. Like I said, this guy had 700 certificates. One of them he couldn't find, couldn't prove that it was accurate, et cetera, and cost him, you know, over $10,000. So if you leave the webinar today with a better understanding of nexus and how important exemption certificates are, hopefully this will be very beneficial. And then also to comply with the jurisdictions you know, their records and their retention rules are very important as well. So the great question, can't this be any easier, right? It's just it's a plug and play. Sales tax, again, I mentioned, is a non-revenue generating activity, and it's about as hard as herding cattle and giving a dog a bath. It's something they never want, don't want to sit still. So it's like the rates and rules and boundaries are always moving. So it can't be any easier. So just a little bit of background of Avalara, kind of, you know, who we are, what we do. We have over 20,000 customers that are using us to get tax right and to make sure they're compliant. You know, we offer, you know, a core suite of products. Our main product is called Avatax. Avatax has three main offerings. Number one, you know, is the accurate, the sales tax determination. So address validation, product taxability on those line items on your invoices, and then maintaining the rates, rules, and boundaries on an ongoing basis. We actually have 5 states that pay us to maintain their rates, rules, and boundaries. It's really interesting if you think about it. States pay us to maintain their information, their content, their boundaries. So we have the calculation determination on the front end. So if you said, hey, look, my grandma's been filing the tax returns for 30 years, she's not going to let anybody else do it. You can utilize us just to calculate the sales tax for you, right? We can calculate it within Fishbowl, QuickBooks, whatever platform you're using. And then once we've done the calculations, we can then file and remit the sales tax return. So we'll actually remit the dollar amounts to the states and local jurisdictions on your behalf. And we will actually file the sales tax returns on your behalf. So that's the biggest thing where I think most people want to reach out and have an outsource or have a trusted advisor handling that for them, because those are the things that are most error prone. So the calculation determination, the filing and the remittance, and then we also help companies to store, maintain, validate, and manage the life cycle of their exemption certificate. So Avatax is our core product, our core suite that has those 3 offerings. So number one, we can get everything to be accurate on the front end as far as the calculation. We can then make it more efficient as far as, you know, utilizing the cloud, keeping the rates, rules, and boundaries up to date, and then scalability, right? We are integrated into over 625 different applications right now. So, you know, QuickBooks, NetSuite, Fishbowl, WooCommerce, you know, pretty much anything you think of, we have a integration or a connector, as we call it, on our side to actually tie in where we can actually calculate the sales tax and determine product taxability. So here's some reasons for Avalara. Using Avalara, these are just some quotes. I'll read a couple of these. So Avalara has helped the streamline sales tax and reporting process within our organization. The CEO who was, I believe, their controller and everything, were doing it manually for, I think, 6 or 7 years, and then they kind of came across Avalara, and we decided to work with them, and we've automated it through and through. Our biggest selling point for Avalara was the ability to determine sales tax using very specific geographical data, specifically latitude, longitude. I actually talked to Mike, he's a great guy. So one thing that's interesting there is when Avalara does a sales tax determination, we actually calculate, we take the address, we run it through the United States Postal Service database. We actually then convert that address to latitude, longitude. One thing's really important is zip code versus rooftop. We don't just use zip codes for calculations. We actually do rooftop, and that's why you'll see here how Mike mentioned we do the geographical data. So we convert everything to lat long, and then we pinpoint it down on the rooftop level, because you may have in the same zip code in the same neighborhood, one side of the street could be, you know, 7%, and the other side of the street could be 4%. So that's where lat long truly comes into play, and it's very, very important when it comes to determining sales tax. Colorado, Louisiana, Alabama, those are 3 states where if you're in those 3 states and you're doing it manually, I can promise you, and I don't say this in a scare tax type way, I can promise you you're probably doing it wrong. So it's worth a conversation with myself or my sales team here at Avalara. So please reach out to us after the webinar if you're in any of those very challenging states. All right, so I'm going to pause right here for 1 second, and I'm going to pull up a little clip that's going to show some stuff in Fishbowl that Gene and actually Roger, who works on our Go Live team, recorded a little snippet here just to give everybody a visual. And
welcome to our quick demonstration of how easy it is to use Avalara with Fishbowl. Roger.
This demonstration will show once we've added Avatax to Fishbowl and entered the license information, you simply process as you would have previously, and Avatax will automatically calculate tax, and it will be transported into QuickBooks complete with tax already calculated. Go ahead, Jean.
So I am going to sell Bethany a new bicycle. So here we go. Bethany. And I think she's going to get a BB 2001. And I issue that. At this moment, there's a sales tax appearing on the sales order screen, but I can have it calculated and get maybe approximate tax for this order. And if I wanted to at this moment, I could go ahead and charge her credit card for the bicycle plus the sales tax. This is necessary because sometimes we don't ship the entire order. Sometimes we have back orders, so sales tax needs to be split amongst a couple of different orders. And now I will quick ship this to Bethany. She's in a hurry. Next, select my serial number. Okay, and now all we need to do is export that over to QuickBooks. And as soon as the export's done, well, I'll just go pull up QuickBooks and show you a beautiful QuickBooks invoice with sales tax.
And that's what it looks like. Perfect, with absolutely no effort other than just processing the order.
All right, so that's really kind of what it looks like within QuickBooks and as it flows over from Fishbowl. And I had a couple questions that came across. I think someone had sent them over prior to the webinar, so I'm going to pull those up really quickly and we'll cover those as well. So there were a couple questions that came over last night regarding, let's see here. So give me 1 minute here. I just want to make sure we're good to go. So one of the questions was, and I'll get to the ones that you put in the tax box. So we need our sales tax rates being by country, by county in Fishbowl and QuickBooks. How would Avalara track those? Yeah, so great question. So when Avalara is actually calculating the sales tax, one of the things that's important, as I mentioned, we're going to calculate the city, state, county, and any special taxes that are applicable. We're going to drill down to the rooftop level and calculate all of it that is involved. So if we would plug into QuickBooks, we'd plug into Fishbowl, and then we would be the ones making that tax determination when you are actually saving an invoice or an estimate or a sales order. So we just need to plug into both platforms. You'll then pull those reports, which I think comes from the second question here is how can I run sales tax liability reports and revenue reports in Fishbowl? We would actually do that within Avatax because we are going to be the overriding the tax functionality. So you'd pull those reports in Avatax, which would be really beneficial, and you can actually send those out. Third question, do we need to track if we have nexus within a state, or can Avalara do it? Good question. So really how it works on our side is that you're basically going to tell Avalara what states you have a requirement for sales tax in, where you want us to calculate tax, and then Avalara is going to calculate everything on the back end. So you tell us what states, what you file. As long as we see the ship to address in one of the states that you have told us you have a requirement for sales tax, we're going to calculate tax. And I'm going to jump away from the PowerPoint here and just show a couple things within our Avatax dashboard. So I mentioned Avatax is our core product or hub. This is what it looks like on the back end. And I'll open up a transaction just so I can show everyone what it looks like. So when we calculate tax, and let's find a state like, let's see here. I like to pull up California because that's typically a challenging one where you have a lot of city, state, county taxes. So here's an invoice. So if you had a sales order in QuickBooks or Fishbowl that you saved, and California was one of those states, and you had 3 line items. So you had a big computer, installation, and freight. When I open this up, you're going to see how detailed, and this is just the invoice detail. So this is a ship to address in Arcadia, California. We have a county tax, a state, a Los Angeles County District special tax, and then a local tax. So we're going to take that composite rate, and this happens to be 9.5%, and then apply that to each individual line item on your invoice. And so when I hover over these, you can see a big computer, $10,000. It's fully taxable, tangible personal property, $950. The second two line items, installation, not taxable, and freight, not taxable. How do we know that? This was a question I think that popped up in the chat box. Was part of using us is you have to take your SKUs or your items, so this one would be installation, and you pick a Avalara sales tax code that best describes a product or service that you're selling. You can map these items within the AvaTax console, or I believe you might be able to do it in Fishbowl as well. But just to show you an example, jumping away, this is our Avalara system tax code lookup. So let's say you sell software. If you sell software, you're going to pick the tax code that best describes your description of your software, so we know what it is you're selling. So let's say you're selling, let me go over one and find a good one. Let's say you're selling digital books, so digital only, no physical media, and you have 75 SKUs that are related to that. You would map those 75 SKUs to this one tax code, and then we're going to maintain the rates, rules, boundaries, and product taxability for that particular item on an ongoing basis. That's our content. That's what we strive to keep up to date, and we add new content every day. I think someone had a question earlier on shipping, so let me see if I can get shipping to pull up here. And this is a great one. So how do we, some states tax shipping and some don't. When you pick this tax code of shipping and handling combined of FR03000 and you map that to your shipping SKU in Fishbowl or QuickBooks, we are going to make the determination whether in Florida or California or Colorado if it's in fact taxable. You just have to pick that one time, and then Avalara handles all the rest, and we maintain it on an ongoing basis. I'll make sure this tax code lookup tool gets sent out. If you think you're in a funky industry or you're in something that you may not feel we have content for, you can take a look, you can type it in, it's an open URL. I'll jump back in here to AvaTax and just show you one other thing, where once we've calculated the tax, then we can actually file the tax returns. And if I go to the tax return and just look at all return schedule, this is where you're going to see, okay, so I have Alabama, I have Arizona, California, and Connecticut. It's going to have the form that you file, your tax ID for that state, the taxing authority, which is Alabama, Arizona, the state, how often you file, and when you need to file it. So I can click on this Alabama form that's monthly, and it will actually show me the form that I have said, hey, Avalara, here's the form I want to file, here's my information, here's the postal code, here's my tax ID, I want you to go ahead and file this moving forward. So the biggest ease of use, in my opinion, honestly, is really just the information within Avalara. It's a set it up one time. It's not 100% outsourced. If I told everybody it was 100% outsourced, I'd be lying to you, just to be upfront and completely transparent. If we plug into your accounting package and we calculate the tax and file the returns, it's about a 90% hands-off approach. So again, it's about a 90% hands-off approach where you would just have to log in once a month or once a quarter, depending on your filing frequency, approve the numbers, make any credits, refunds, adjustments, and then we will file those returns. We file them on time, and we fill them out properly. You just need to tell us, what states, your frequency, and how often. We answer tax notices from the states. If there's states that have any timely filing discounts, we will get those taken care of for you. And one more thing under the settings, and then we'll open it up for the last 15, 20 minutes of Q&A, because I know there's some other questions. But under the settings tab, this is where you're going to tell us all that information, right? You have your account ID, you pick a company code, and then you'll tell us where you collect tax, what items you sell, do you have locations, do you have exemptions? We actually have a new offering called AvaTax Exemptions, where if you are a smaller company or you have 15 customers that are exempt, you don't need to pay us to manage all the certificates. You can actually manage up to 25 exemption certificates through AvaTax Exemptions for free just by buying AvaTax. So that's a really big plus, and you can actually use our tools to send notices out to those companies and obtain new certificates. So it's really easy to set up Avalara. You can actually run reports, which you would do in Avalara. for everything that happens in Fishbowl. You can run tax return filing reports. We have lots and lots of reports that you can build. You know, if you sell apparel in New York and you just want to run a report for that, you can build it. You can do that as well. You can go under tax return filing reports, sales and sellers jurisdiction detail. I'm going to hit create report. This may backfire. I'm not sure if we have any data in the previous month. I hope it does, or Matt's going to look kind of goofy here. So let me generate this report. And typically, got a little nervous there. I'm not going to lie, started sweating. So this is a report that you would have within our dashboard at your disposal just by having our calculation engine. So if you want to continue to file the returns yourself, that's perfectly fine. You can come in here, you can run a report, and you can say, okay, here's my previous month for California, and here's a breakdown. Here's the state, the counties, the special taxing jurisdictions, what's taxable, what's exempt, what's non-taxable, total amount of sales tax, the tax rate. You have all of this at your disposal just by being an Avalara customer. So our reports are very detailed. You would have to pull them out of Avalara because we're the ones calculating the tax in Fishbowl. So just to give everybody a visual. And we're at 42 minutes after the hour, so if you want to see anything else, by all means, please reach out to myself or Gene after the webinar. I'd like to stop and open it up to some Q&A. There's a few questions in the box that I'm going to pull up here shortly. So let me address these, and then I'll see if Jean has anything else she wants to add. So would Avalara be able to recognize trade show sales outside of the home state? You would have to tell us if you have nexus in that state in order for us to calculate tax. I mean, we can do a nexus study for you and then determine, you know, if you need to be charging tax. We wouldn't know unless you said anything to us, you know, if you're at a trade show. We have no way of knowing that. So I don't know if that answers your question, but hopefully you kind of have to tell us that. You can do a nexus study. We can then, you know, determine whether or not you need to get registered or collect tax in those. Are there any additional customer reports provided by Avalara? Hopefully I kind of answered that with what I showed there, and we can take that offline as well. Is Avalara able to receive sales imported from PayPal? Yeah, so you can import transactions into AvaTax as well. Let me just go right over here. You can import transactions via CSV. We can take them and there's a lot of different, I wouldn't say a lot of different formats, but we definitely help that. We have some pre-recorded webinars that talk about how to import the transactions. We have a file here, which I haven't opened in quite some time, but let me pull that up just so I can show it on the call, where it's pretty much what we need in order to get that transactional detail. And it's pretty much this customer, you know, the code, the bill to, the ship to, the dollar amounts, what it is, the tax and everything. You can send those into Avalara and we can recalculate everything, or we can just recognize that you sent in 100 transactions last month and all of the tax that came across from California to populate that to a return. So we can do that as well. We're actually working on some features that are going to make that a lot easier than the manual process. It is manual, to be completely honest with you, but we can definitely do that as well. Next question, is Avalara able to calculate duties and taxes outside of orders for yes? Yes, we do support the US, Canada, as well as 189 other countries. It does depend on the platform. So I'll have to check. I don't know if Fishbowl can handle international tax determinations or calculate VAT. For example, QuickBooks Desktop, we calculate VAT. QuickBooks Online, we don't have that functionality. So it does depend on the platform itself.
When we're using Fishbowl Canadian or Australian version, yes, we can do that.
Perfect. Thank you, Gene. So, you know, it does depend on platforms. Like, I think one of those other questions may have been surrounding like an online store. If you had like a WooCommerce plugin or a 3D card or something like that, it all depends on if, you know, we have that functionality to calculate the tax or calculate VAT. So yes to your question, and with a little bit of caveat, and thank you, Gene, for jumping in. So we're at 46 past the hour. I'm going to reiterate a couple things we talked about early in the webinar, and then I'll stay on for if there are any other questions. So Again, nexus is an industry term that describes that you have some sort of physical presence or a requirement to collect and remit tax outside of your home state. Make sure you have exemption certificates on file if you are working with someone that is going to be exempt from sales tax, and really just work to keep the rates and rules and boundaries up to date, you know, in your platform. Just to show a really pretty map here, this is our free tax rate lookup site, where you can see here all of the, you know, 13 to 15 plus thousand taxing jurisdictions that are in the U.S. I mean, this is really why Avalara, you know, is a company, is in business. I mean, if you look at a lot of these states that have all these colors, you know, Pennsylvania and Montana and Massachusetts aren't too challenging. Kentucky and Indiana are pretty simple, as well as Mississippi. But if you get into some of these other states like Alabama and Louisiana that you've heard me mention, just to stroll in, I know this is probably killing everybody with the eyes just with the zoom in, but you can see how challenging this is. If you have to collect tax in Birmingham, Alabama, and I'm just going to keep drilling down here, you'll see all of the different taxing jurisdictions. So in Moody right here, that has a 10% rate, the taxability of software or service or installation may be completely different than over here in Vanderveer or Starrett or Shelby County. So right here, this could potentially be the same zip code on the far side of Shelby County at 5%, and then Moody right next door is 10% and 6% and 10% again. So this is why it makes sense to outsource and why to talk to someone, talk to a third-party provider. So we give rooftop level calculations within Fishbowl and QuickBooks and whatever other platform you use. We'll help determine product taxability, and we can automate, as much or as little as you like from a sales tax compliance perspective. That's all I really wanted to dive into on the very end. I'll pause here, and Gene, if you have anything you want to add, or if there's any other questions, by all means, we'll just kind of let it be an open forum. Please type them in, and then we'll give everybody a few minutes back. And any questions are welcome. If there's any questions you have, if you want me to repeat something or dive back into something else we talked about, please fire away.
Come on, you guys have to have a question about something.
Life in general, please fire away. My wife does not say I'm a great listener, but I try pretty hard while I'm at work. So fire away. And everyone will have, myself and Gene's contact information when we get off the webinar, and I think we send a follow-up out. So if anything pops up, 2 hours from now or 2 days from now regarding, sales tax and QuickBooks or Fishbowl or life in general, please feel free to reach out. And I know Robbie will send something out as well once we get done. I'll stay on for another couple minutes, and if you have any other questions, let us know. All right, thank you. What is the average time needed to provide a nexus? I may ask you to ask a little more than that. I mean, you can establish nexus, the second you hire a contractor or hire an employee outside of your home state. Typically what we talk to folks about is if you think you've had nexus for over a year or 6 months or 5 years in a state, we look at the rule of, do you think you have less than $5,000 worth of tax you owe or more than $5,000? If it's more than $5,000, where let's say in Colorado you did $100,000 worth of sales, it may be advantageous to go through a voluntary disclosure agreement or reach out to those states. If it's under $5,000 in taxes, then you may just want to get registered, and you may just have some small penalties and fees and stuff like that applicable when you do get registered. Because one of the first things that's going to happen is when you get registered for a state for sales and use tax, the second question I think is, when did you start business in this state? You don't want to put April 1st of 2018 when you've been doing business there for 5 years. Because let's say you're doing $500,000 in sales, and then you do that very next month, that's a huge red flag. You just started business and all of a sudden you did over $200,000 in sales. That's a big red flag, for auditors. So you want to keep that in mind. Over $5,000, under $5,000 in sales tax is kind of a threshold. How are refunds or returns handled? Good question. Yeah, so if we have already filed the taxes and we need to issue a credit along those lines, you have from the 1st to the 6th, you log in, we populate everything for your liability worksheet as far as the returns filing. You have the 6th to the 10th to handle any credits or adjustments. If you do have if you've already remitted tax, and then if we have already remitted the tax for you, and then it is a credit, we would then just issue a negative amount for the next filing period. Would you be able to obtain data from the Fishbowl sales forecasting plugin? Gene, I might defer to you. Would you be able to obtain data from the Fishbowl sales forecasting plugin?
I'm not sure what kind of data you would be interested in obtaining, because that's a forward-looking sales forecast. That's not an actual taxes owed situation. So I'm not sure how that would pertain to sales tax.
Okay, perfect. And whoever, I think Laney sent that in there. If you send me an email.
You have a question over in chat as well, Matthew.
Oh, sorry.
So as far as updating your tax codes, that's instantaneous across the web as they apply.
Gotcha. Yeah, sorry, the chat wasn't pulling up. So how does Avalara...
Okay, then she asked if there's... Okay, sorry.
No, no worries. So how do you update new tax codes? So, I mean, we add new content every day at Avalara. I feel like every week or so or every day I get an email that, hey, we now handle this. So we do update it, you know, constantly. It is the job, it is your responsibility to pick which tax code best describes your product or service. We are not allowed to give tax advice. You know, we can't say, hey, you should pick this one over that. Is there a difference when we collect tax and pay tax? Does Avalara record these differences? We don't do anything with income tax. That's outside of our scope of reference, if you will. We are.
I don't think that's the question. If there's a difference between the tax we've collected and the tax we need to pay, is it gets booked to income. And frankly, I think most of the time you pretty much have to remit everything you collect. Don't we?
Correct. Yes, ma'am. All right, I like that next one. Well, I'm sold. This will definitely save lots of time. So we're at 54 past the hour. I want to thank everyone for joining the webinar today. Hopefully we got all your questions answered. Hopefully you know a little bit more about AvaTax and Nexus and our Fishbowl plugin and exemption certificates. We'll have another webinar probably sometime in May or June. So if you had to leave early today, please reach out. We'll send out some information for the next time we do have this. But I want to thank everyone. I want to thank Gene. I want to thank Robbie for putting this on. And we really appreciate your time. And we hope to hear from you soon. And we look forward to helping you guys automate the daunting task of sales tax compliance within Fishbowl. And there should be a follow-up email coming out. I think it actually comes about an hour or so after the webinar. So you should have an email from Avalara, and if you have any other questions or if you do want to speak with us further, please reach out to myself or Gene, and I think Robbie will send some communications out as well. But we look forward to talking to everybody soon, and have a great day.